What is the market telling me this week? Welcome to the Nick Rutherford Report, and the market is either going to take advantage of you or you are going to take advantage of the market. So hit that like button, subscribe to this channel, share this with someone who would get a lot out of it, leave me a comment, because this is the place to be for the financial news that matters for your net worth. Let's get to it. Inflation expectations rebound in September. That's the market headline. And what is this telling me? Well, let's get into it because the futures are gaining on expectations of a Fed rate cut. At least that's what Wall Street wants you to believe. And you know what? There's some really interesting things going on in the market. But what I like to do is look at the data, and there's some very interesting data like this. Endgame interest rate on U.S. debt surpasses $1 trillion for the first time ever, exploding in August as budget deficit zooms to a record high. Yes, it's really zooming. And what are we talking about here? Let me just zoom down here and look at these great graphs. So here's some really interesting graphs here. The spending smoothed out over the 6-month average is really something to look at here, right here on the left in the middle of the screen. And if you look at it during the plague, we had this going really, really high, and now it's turned up again over, what is this? Let's see if I can zoom in even more here. Yep, here we go. Let's get it on screen here. We're up to 600. That's probably $1 billion per 6-month moving average here. It is staggeringly high, and you can see it turning up even more. It's just some sort of out of control spending. That's the only way to look at it. And what is this telling me? And what does this mean for assets? Well, let's continue looking at the trends here. And this just means typically the market is going to tell me that if we're going to spend a lot of money, then the value of the money is going to go down and that assets are going to go up. And that's one of the themes that I'm going to talk about, and I've been talking about, and I'm going to talk about every week, and I've been positioned for the last few years, and I'm reaping the rewards of it now. And gold happens to be one of them, because gold definitely seems like it wants to go up the more and more money we print. So let's visualize the rise in gold. Here, I think this is a great article to look at. Let me get the chart on here too. You can see that for George W. it went up 215%. For Obama it went up 44%. For Trump it went up 53%. And now Biden, it's gone up 37%. So we probably have more to run if the history is any guide to what happens in the future. And what's most interesting here is, yes, gold is surging to record highs after hot PPI print. According to the news, there's a hot PPI print, so gold's up. That's the reason they want to stay. Who's to say what the real reason is? But I can see by looking at the market that the gold is going up. Is it foretelling the inflation that we may have in the future? Well, let's look at a few more of these articles. Well, there certainly seems to be a lot of inflation. If you look at this, see, let's look at the whole food bags here. And as you can see, I thought this was a very interesting article to bring to everyone's attention because there are parts of the economy that are doing good and parts that are doing bad. And if you're spending more money for less stuff, of course, the GDP is going to go up. Why wouldn't it go up? Because it costs you more money to buy stuff, and it's very obvious. Like, just look at the bags. So, what happens next, and what am I doing about it? Well, we're continuing the trend of investing in what works and staying the heck away from things that don't. And that comes down to things that are going to work, like gold. I've been invested in gold for the last few years. It's been going up. Since 2022, I've been invested in big tech because all the growth is there. I like to read the data. And when I read the data tells me what to do. And it certainly is telling me right now that NVIDIA is going to get better and better. Why is this? Well, NVIDIA soars after CEO says that the demand for AI chips is so great, customer relations are tense. I'm not so concerned about the customer relations, but what's very, very interesting to me is the data. And what are we going to look at for the data? Well, let's look at the monthly revenue for TSMC because TSMC makes all the chips. This is Taiwan Semiconductor. and they are up 33% year-on-year change since last August. This is their second highest revenue month ever if we look at the data. And that tells me that people are buying more and more and more chips. Guess what? If they're buying more chips, that means all of the stocks, all of the companies, all of the systems, all of the processes taking advantage of AI are growing, and they're growing very rapidly. That's why I always want to look at the data so that Wall Street doesn't take advantage of me. Instead, I can use the data. It's going to tell me how to take advantage of the market. And I see some tremendous opportunities in the market. So let's keep going to look at some more of the data here. We have articles like this that say the last hurrah, credit card debt unexpectedly soars despite record high APRs. Well, guess what? There's going to be people that are doing really well and people that are doing really badly. Which side are you going to fall on? Because as inflation increases, as it's been, even if people say it's down, if the bags are shrinking like I just went over, well, guess what? Inflation is still happening. Do you see prices going lower and lower? I don't see prices going lower and lower. This means lower income consumers, middle consumers are going to get squeezed. But guess what? The rich's assets are going to go up and up and up. And when you're investing in the right things, your assets are going to go up and up and up. So, what is this telling me? Well, it tells me not to really worry about the low-end consumer unless I'm investing in like the Dollar General. But the Dollar General is not growing earnings, so I'm not investing in that. I'm investing in other things. And there's some really interesting headlines that we want to talk about this week. Well, Buffett's vice chairman dumps over half of his Berkshire shares. Why is this interesting? Well, let me pull this stat up right here and get it on the screen. Well, right now, Berkshire has $276 billion in cash. It's a record. Full-blown record. So, why is this very interesting? Because if you look at Berkshire Hathaway's market cap, it is close to $1 trillion. Round that off, that's a quarter of that alone in cash. So if you're buying that business right now, you're getting a quarter of that just in cash. That seems like a good deal. But I'm not running out to buy Berkshire stock because Warren Buffett is building up cash. He's selling off Bank of America. His lieutenants are dumping stock. This is not a good sign for the economy. And I know everyone will say different things about it, but you know what? He's not a person to invest in high tech, in the next big thing. And right now, that's the only place where the data is telling me to invest because I see earnings. And as AI expands, there's going to be more earnings. And you know what? We just went over the data of how there are more and more chips being bought. So the party is certainly not over today. Of course, it might be over tomorrow and we're going to have to watch the data. But this is why I've been invested in these trends and I continue to be invested in these trends until I see other data that tells me not to be invested in these trends. So, what are some other things that I'm watching at here? Well, core inflation comes in hotter than expected as shelter costs unexpectedly rise. And you know what? I am completely hedged against inflation because you know what moves inflation? Oil. And I bought tons of oil stocks back in November of 2021. And they've just gone up and up and then they've gone sideways, and that's okay with me because if inflation comes back, I'm already positioned for it. That's what I want you to do to take advantage of the market. Be already positioned in the things that are going to take advantage of the future. And that's what we're looking at right now. We're looking at what can we do to take advantage of the future. I'm not saying go run out and buy oil stocks because, well, they're mediumly priced. Oil seems to fluctuate between $20 and $30. Inflation adjusted in 150 and it's at 70. That's in the middle. That doesn't really tell me anything. It certainly doesn't seem like a good entry price. But if you're following along, we're going to find out what to invest in when something appears as a good deal. And I want to point out the most disturbing statistic that I've come across recently, and that is let me get it right in front of you here just to move this down. Rare negative net savings flashes recession signals. What assets are recession proof? Well, I can tell you right now, almost no assets are recession proof because as the quantity of money or the speed that people are spending money goes down, well, asset prices typically go down. So the only thing that's really recession proof is money, because people want money. Therefore, the price of money relative to assets usually goes up, or bonds sometimes go up, provided the Fed is lowering interest rates. But we're going to have to wait and see what happens there. I don't have any assets, or none of my assets are in bonds right now, because I'm really afraid that they're going to print a lot more money and just destroy the currency like they've been doing. Now, in more than 75 years, net national savings have only gone negative 3 times. And that was during the Great Financial Crisis, during the plague, and right now it has tipped over into negative, I believe, over the last 6 quarters, if the economists are right. And that is something to watch very closely, because this is a wild and weird economy, but there are some amazing investment opportunities if you know where to look. And that's what we're doing. We're going to be looking, and let's continue here to look at the market. So the S&P 500 is, well, it's in a topping pattern, or it's trading sideways, but it's certainly not trending downwards. So I'm not worried at all. Until I see it trending downwards, I'm not worried, and I'm completely long. And until the data tells me to get out of the market and hedge or sell short, well, you know what? I'm going to be long, and I've been mostly long since back here in 2022, and there's really no reason to be out of the market right now, because it's trending sideways. It's still in a definitive uptrend, and you know what? The main companies of the S&P 500s are still growing earnings. So until that changes, it looks like Nvidia could be a good buy. I'm watching it very, very closely because it's trending sideways. I'm not saying rush out and buy it now, but I am saying TSMC is making more chips than ever, 33% over the year before. Let's make sure that there it is right there. You can look it up online. But Wall Street and most people, they just don't read the data. And you know what? Bitcoin is trending sideways, and we're at that part in the cycle typically where it goes completely bananas. So if the past is any guide to the future, it probably will go bananas. Of course, things could be different this time for some sort of reason, but my thesis on Bitcoin is still the same. I've been invested in it for a long time, and anyone can invest in it now through the ETF. It's very easy to get. You don't need to do anything complicated. And as long as people like Bitcoin and the supply is going down, well, you know what? The price probably will go up eventually. And that sounds great to me. But what's most interesting in all of the data is that gold is breaking out to a new high again. Here is the chart of the physical Sprott Trust holding gold. And it's up, 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 up. This has some big implications, and it's really flashing a warning sign. So I'm glad that I really loaded up on stocks, mining stocks, and gold way back in 2020 and again in 2022 when they sold off tremendously. And I think I'm up on my biggest gold stock holding 60-ish% depending on how the market is. It was 62 yesterday. Can't put an exact number on it because it fluctuates so wildly. But these companies are going to be spitting out cash if gold maintains this type of high price, which I expect until the policy of the government is to stop spending and making up money. Well, I expect that the value of the currency will go down and assets like gold will continue to go up, and good assets that are growing, not the Dollar General right now, but the things that are growing will continue to grow and continue to grow up. So what happens next? Well, unemployment gets worse and the market grinds lower. That is one possibility. Or the fiscal propels the market higher and nothing else matters. And right now it seems like my base case, which is the fiscal propels the market higher, nothing else matters, is what's happening, because unemployment came out last week and it went down. So until it starts to go up and until the market starts to see it going up and starts a downward trend while that data is going up, I'm going to be long and I'm going to be making money, and I've been making money. Now, I hope you're making money too. And the way to do that is find amazing investments that are taking advantage of these trends that we're pointing out. And if you want to take advantage of these trends and see what I'm investing in, I'm starting a beta test for a research service where I do all the research, I show you the stocks that I'm investing in, and you can decide if you like them or not. And if you like that, you can just email me at nick@rutherfordwealthreport.com, and I'll share what I'm doing there. Now, I am still operating under this base case of fiscal propels the market higher. It looks like that's what's happening, and we'll have to see. We're just going to continue to watch it next week, and I'll have another update. But until then, the most important stock in the stock market, NVIDIA, is trending sideways. It's not going down. Yeah, it's not going up, but TSMC is printing more chips. They're making more chips than ever. What do you think that means? I don't think it takes a rocket scientist to figure out that that probably means more AI, more chips, more money for the companies that are taking advantage of that, which is basically most of the S&P because it's market cap weighted to these mega tech companies that are using it. So to me, everything is a green light, and that is the market update. So hit that like button, leave me a comment, subscribe to this channel, and I'll see you next week. How am I using this information to protect and grow my wealth? Go to highreturnlowrisk.com.